Okay, so let's start our morning MAO right now. Today is the 2nd of March 2021. Okay, let's just begin this morning and let's start it right now. Okay. Now, normally Tuesday and Thursday, I will start the morning MAO a little bit later because I need to send my kids to school. So I'll be a bit late by about 15 minutes, so about 8:45 or around there. I will do my MAO, okay? All right. Okay, so let's start this morning MAO. Okay, the Federal is not going to stop, isn't it? I think that it's very clear that we saw a lot of manipulation in the market. And I can tell you this today when I was doing the usual global market analysis, right? It means I take the news from the global market, especially from CNBC. You know, when I read the article, I really cannot stop myself from just laughing away because it's the way they construct the articles. Let's say someone didn't follow them every single day, like myself, right? It is very easily to be, brought into the way they want you to read. So let me explain to you why later on when I do the global news, and then you can see if you've been following my MAO every single day. Okay, let me ask first of all, how many of you follow my morning MAO every single day? So if you actually have been following my MAO every single morning, please key every morning. Right, if you actually has been following my MAO, okay? So guys, let me ask, how many of you actually follow my morning MAO every day? If yes, it's all right, okay? Just key the two words every morning. All right, every morning. Let me see how many of y'all does that. Okay, so there's quite a few of you that's actually replying, right? Thank you guys, appreciate that indeed. All right, thank you, right? So every morning, right? So if you follow me every morning, then you will know that, right? Later on, when I do some article sharing, you will find the way they really, the way they present their case on the social media. I mean, on the media, right? It's really very, very skewed to one side, whichever they want. Okay, so let me show you. Thank you guys for replying me. Thank you. Okay. So this is the enhanced picture, okay? This enhanced picture. Now, there's a different way of interpreting it, okay? So let me explain this to you. Okay, so of course, the bulls have went back into the stock market. We saw the Dow Jones up by almost 600 points yesterday. So the director tells you, say, not yet, not yet, not yet, okay? And the bear asking now, now, now. So what do you think this lady is doing, or this girl? What do you think she's doing? Why is she at the stage? Why is she having, I think, a mask, okay, on her? What do you think? What do you think is this picture, the caption of this picture? What do you think? I want you guys to key in your own caption. What do you think that, why is she in this picture? Now, there's no real answer to this. It's just that I saw on internet. I find it very appealing. And I actually, in a way, explain my personal thoughts too. So that's why, but then again, different people have different style, right? So please tell me, guys, what do you think that putting the young girl there, not I put one, someone put it in and send this picture total, in total. All right, so what do you think that, what is it trying to say? All right, anybody, can you just tell me what do you think that this picture, this caption is trying to say? Colin said that Cassandra is ready. Oh, okay. All right, anything else? Anybody on trying? What do you think that this lady, this young girl, I'll put it this way, why is she standing at the curtain side? Why is she having a mask on? And why is she inside this picture? What do you think? I want to hear from you guys first. Okay, Lo say that want to sing but not allowed to. Okay, that's a good one. That's a good one. COVID returns. Okay. Fat young lady being gagged. Lester, good one. Okay. COVID may spring in the bear. Okay. Anthony, speak no evil. Eileen, muffled. Okay. All right. She will be the signal for bear up, come up. Was it? Gracie. All right. Wear your freaking mask. Okay, not ready yet. All right. So basically, thank you guys for all the messages. I will read them all by one by all of them. This is what is very cool. When we do this sort of thing, we can chit chat a little bit. So when I saw this, it's like, yeah, straight away my train of thoughts came in is that, the lady is not allowed to speak because she is masked. So because of that, right, both the lady or the fat lady and the lady are supposed to join the bear to go into the market to tell, but apparently now they are being held back. They're not allowed to say anything, and that is whereby the bulls are taking the center of attention again. So this is what I feel like my personal train of thoughts. Okay, of course, different people, different views. It's fine, but that is my view. So why do I say that the bears are not yet? Look at the way the Federal Reserve is pumping the type of money into the market. Now, as of 23rd of February last week, they are pumping additional now total, okay, in total, 7.59011, okay, meaning $7.5 trillion. Oh my goodness. Now think about this, is in just a matter of, okay, in a matter of just 7 months or 8 months, the Federal Reserve have pumped in almost $3 to $3.6 trillion into the system. Now, of course, this is really showing the reason why the stock market still cannot come down. All right. So the Federal Reserve have already said, right, in last year, December, they continue to keep buying the bonds until the economy get back to full employment. And to them itself, it must reach full employment and inflation stays at 2%. So now inflation is at 1.2 to 1.5%. To them, it's still a very far distance. So don't worry, we'll keep on putting money. So this is where my point is this. Federal Reserve every month is committing themselves to make to basically put in at least $120 billion. So of course, that's why I'm saying this. For the bulls, if the market pulls back, it's always a correctional buy. So yesterday, right after my morning MAO, I was asked this question on the site. Okay, they asked me, Kel, I'm confused. Your macro economy chart, your conventional chart, you are saying that the market potentially there's downside to go, right? But when you go into your TWB chart and immediately you say that today's a buy, I'm very confused. So can you be very clear on what your direction is? So this is what I received, and I tried to explain. Then this person asked, then why can't you take a view? So I told them, just look, okay, let me be very, very clear here. Macro view is basically taking what traditional traders are using the conventional, like the moving averages, the trend lines, the mathematics. And you can see that overall, the market seems to be at peak and there is some selling at this moment right now. But when you go to TWB chart itself, whatever the chart says, today, you're supposed to follow, you follow. So it's just that today, if you had to go long, you just have to go long. You cannot tell me that because the macro picture is overall is now, and overall is a bit on the downside, you just forsake to this buy. So that is where people still cannot get it. It's just like telling you in this form, okay? The property market is at very high level. But if you don't buy your property or your home today, you have no home to stay. And then after that, tomorrow, if the price go higher, you get blamed by your family members. But you know that the macro picture is really at a high. But the problem is this, it's very hard to time the market. And if the Federal Reserve is continuing pumping the money into the system, we know that it's just blowing more and more air into this bubble. End of the day, it will prick and the result will be disastrous. Because if you look back what happened in 97, all right, 07, and even 18, it's the same. But the problem is that before that thing breaks or bursts, there will be this period whereby people get very upset because you know why? They fear to buy, but the price keeps going higher. And that's why I keep on saying this, you follow the trade with the boy system. All right. So the thing is this, for me to keep on doing this morning MAO is because I realized that it also helped me to realize that it's because of this type of, what you call, train of thoughts of people or individual, it causes people not to able to focus on the right thing. But people who know how to focus, they just keep on buying yesterday. When the rules calls for it, they will be making a lot of money. So that is the reason why I say why traders don't succeed, because they allow themselves to fail because they don't want to see the difference between the macro picture and the micro picture. Okay, so I hope you guys can get it clear. And later on Super Tuesday, I will clarify this once again. So we can see that, right, Federal Reserve have already said they will do responses during the bond market turmoil, which is currently right now, all right? So as long as the market is having a problem, all right, Federal Reserve will have no doubts about it. They'll pump in more money than you can think of. And you can see that this is, of course, this is fake, but this is just showing Jerome Powell pumping a lot of money and he's very angry, green color face. So he's pumping a lot of money into the system, okay? This is what the picture is trying to say. So you can see, right, on Friday, suddenly the bond yield from 1.5 to 1.6%, suddenly it just dropped all the way down to 1.4%. Okay, and very clear it's outright some manipulation has went into the system. So seriously, you can tell me how can the inflationary problem suddenly over 2-3 days disappear? It cannot be like that, right? So the only way how economic works is that, right, there will be intervention when the market don't play fair. So when they don't play fair, when you do a lot of using other arsenal to bring the thing down, well, that's what happened. So you see, within just a weekend, the numbers changed from 1.5 to 1.6 down all the way to 1.4. So this is whereby I can tell you this. Why is it so important to trade the market every single day? Then let's look at the macro picture, because you will not be able to fight with the boys. So you just have to strictly follow the market itself every single day. All right, got the idea now? So the question isn't who is going to let me, is who is going to stop me. I like that. So it just basically tells you that Federal Reserve doesn't care who you are, right? They are the one have the printing machine. So basically, it's right, as long they are involved in this game, it's almost impossible to take on the other side. But I say again, do trade the market individually every single day. That will be your best bet, okay? So you got to be a beginner before you can be anything else. It's always true. Every time we start to trade in the market, whether you are even a veteran trader, seasoned trader, we all start from the very beginning, right? Only the difference is some of them, when at the beginning stage itself, they very phase out because they already lost money and they couldn't get back. Now, some of us who have been staying on so long is because we realize that we can actually learn from our mistakes and get better and better. But some people is right, despite many years in the system, they still cannot understand the difference between macro picture and micro picture. That is a problem here itself. So this later, Super Tuesday, I will go through this again. I hope you guys can come on board to listen, but it's only meant for TWB members, okay? All right, so disclaimer as usual, guys, we will have to ensure that you do have your own self-checking, your current financial status, and make sure that you are able to handle any sharing that I do during the morning MAO, because I don't want you guys to get caught in one position and then after that devastation comes in and lose a lot of money. All right, cool on that. Okay, so let's go through some of the big global news right now. Oh, right, the Senate Democrats to drop the minimum wage plan in the 1.9 trillion stimulus bill. Wait a minute, okay, didn't this Harris Kamala says that they will make sure at all costs that the $15 minimum wage comes in, all right? Didn't they say that? Didn't she say that? But of course, now suddenly I went through the articles, I realized that, hey, we can't find anything regarding that as well. I went through Google, they seemingly smoothen it. Didn't say that, she just said we will try, okay? So they are trying now to have plan B. A plan B means that, right, okay, the $15 don't come out from this bill, it's fine, we come another way. So you see the way that they structure the articles, it gave you the type of feel that yesterday was saying there's a concern, today it says no problem. So the market keep on flip-flopping, and that is the reason why a lot of traders get hit. So now they are telling you that Tesla, tech analyst says that, right, the EV, the electric vehicle stock could soar 50% this year. Wow. The question is this, how come they don't say this 2-3 days ago? 2-3 days ago when the market was coming out, why didn't they say that? Yesterday, when the NASDAQ recovers so much, then they say, it's always like this, my friend. They have to buy first. Then after they bought it, then they come out with the positive news. It's been like this for so long ago. This is one of the oldest trick in the book, whereby market sells first, boys buy back, then they go long and the news comes out. So what to me is that now this guy is saying that this industry will be a 5 trillion market. More upside. Now I don't disagree on this, but I think it's going to be tough because you know why? Because you think about this, if everybody go to electric, right? Then what happened to the energy? the one that we've been using. Unless you tell me everybody now takes away the car, no more gasoline, we just straight away go electric, and then we try to save the world, save the Mother Earth, and then of course only the others logistic or those flight to other countries, then we use the gasoline. So all my point is this: I am sure we will be able to reach this stage of electric vehicles running on the road, but I don't think by too near future. So to me, is that right? For EV shares to be up by 40 to 50% within this year, I don't think so. You tell me of 10%, 20%, I buy into that. But again, these are the experts, so you may want to take this as a consideration, okay? And of course, they talk about Bitcoin, about people putting Bitcoin into the corporation right now to do their accounting. I think this is really getting a little bit too much, okay? So that's why the New York Attorney General warns cryptocurrency industry, play by the rules or we will shut you down. So apparently it's not right. This person says that you shouldn't be doing this much, okay? You shouldn't be doing this much. And if you do it too much, we will shut you down. So of course, at the moment now, you may think, oh, what's a big warning, right? If it's a big warning, then the market, Bitcoin must go down. Oh, you're very wrong. In fact, the Bitcoin went up 10%. Oh my God. Bitcoin went up 10%, okay? The problem is this, okay? When Bitcoin was at $55, $55,000, it came down to 45,000. It lost itself about 20%. Then yesterday alone, it went by 10%. So you can see the volatility is crazy. And if this is going to be part of your accounting books, so you're talking about you lose 20% one day and you won back 10% next day. It's really crazy stuff. But this is what is ongoing right now. And that's why I feel that, right, the more companies buying Bitcoin into their portfolio, right, sooner or later, this is going to cause a bit of problem. Now, the thing is this, I may be doing a very interesting short video or short sharing about Bitcoin, all right, very soon. Now, this one is something that it consists of a little bit of sharing on Bitcoin. It consists of a bit of conspiracy theory on Bitcoin. So it's only for students only. So that's why I say that if you are interested, right, when I'm ready with that, you can come online and watch it and I will share with you. Okay, it's something that I'll talk about. Now, of course, when this is ongoing, Apple, this is the one that really give me the question mark everywhere. Okay, so what happened is this: Apple stock has the biggest up day since October, right? After Warren Buffett endorsement, okay? Right, so basically we saw Apple share up by 5%, okay, to 127.80, all right? So apparently it's right. It's being noted here. Warren Buffett, in his annual letter published this weekend, said that his investment firm still own 5.4% of the iPhone maker. Okay. And he says that, right, Berkshire investment in Apple vividly illustrated the power of repurchases, which means that, right, they say that Buffett says Berkshire Hathaway, like Apple, plans to repurchase its shares. So he's trying to say that, right, Apple will repurchase its shares, something like what Berkshire do. But the thing is this, because of this particular statement, they basically put in a way that this Berkshire is right, basically very bullish with this Apple. But if you remember that just a few weeks ago, Apple shares was sold off from the portfolio of theirs. So you see, the question mark is, they don't cover that in this article. They do not show you or tell you that they had Berkshire have sold their shares away, but they only tell you that, okay, yeah, Warren Buffett said this. So they pick up the positive thing and put into this article, and that is how they will make you think that, yeah, it's time to buy more Apple. So of course, the other thing is more positive is that Apple says that they're going to open all the US stores right now. So it seems to be telling the market that, hey, you don't need to worry, man, everything is going to normal. Now that is pretty bullish, right? Because if Apple earnings last quarter was based on about half of their stores open, if imagine all the stores open now, wow, you can see a bigger earning, right, coming soon. That is the reason why people are buying into Apple. But if that is the case itself, right, how about the COVID-19? So don't worry, my friends. CDC says, right, the J&J, Johnson & Johnson COVID vaccine is okay for people who have allergic reaction to Pfizer and Moderna. So now they're telling you that don't worry, okay, you have allergic reaction, don't worry, okay, J&J COVID vaccine is all right. So they're saying that right now, right, okay, if people got this vaccine, this allergy in the vaccination, they should try J&J. And they're saying that J&J is a one-shot vaccine, you only go in 2 times. And of course, there are 47 reports of different types of allergics. There's a bit of life-threatening, but it's still all right. So at the moment now, right, you can see that, right, 4.7 cases of every million, 4.7 cases for every 1 million doses of Pfizer vaccine administered, and 2.5 for every million of the Moderna. There's some allergic. Okay, so it's a very small number here. So they're trying to say that don't need to worry. Okay, so end of the day, they're telling you this: the world economy is doing fine right now. There's no inflation. There is no reason to be afraid of the COVID. You can have the vaccination. The world global economy will recover. Okay, so I buy you on that itself. But the question is this: then why aren't you still pumping money then? If you think that things are going to be so well itself, why still pumping money? Oh, because you're telling me that the money must be pumped so that in case it's not enough. Okay, fine. So guys, this is really how the media portray their stuff to you. You make your own decision end of the day. Okay. All right, so we can see the Dow Jones basically rocketed all the way from the opening bell, non-stopping. I already said yesterday, once the market stayed above OP and pivot one, it's a buy. I've been saying this for so many times, and I cannot repeat enough to you. All right, but then now the Hang Seng is going to open soon, right? So I'm going to do Hang Seng for you right now. Everybody take a look now. This is the Dow Jones chart. Dow Jones is trading a slightly lower than the opening price, but this is not what we're looking for. We'll get Hang Seng right now. Hang Seng, come on. Right, Hang Seng is going to open in about 30 seconds time. Now, Hang Seng, with that, Hang Seng, let's do a quick one now. Hang Seng, basically, this is a Hang Seng chart. The MLP today will be somewhere around here, okay, somewhere there. And the MA30 is still about 29,749 level, so shouldn't be a problem. Hang Seng going to open right now. Let's take a look. Hang Seng, okay. Hang Seng is going to open in about 8 seconds time. Let's take a look. Okay, Hang Seng has gap up. Hang Seng has gap up because of the Dow Jones. Yeah, gap up higher. Now the opening price of Hang Seng is here. So watch two things. KSI is red in color, so it will be more towards the sell side. Okay, more towards the sell side. So if the market stays below opening price, there is a chance for the market to pull back to probably the MLP of the previous bar, which is somewhere around here. Now, of course, if the Hang Seng goes up, it is possible for Hang Seng to test 30,000 again. But then with the KSI red color, if the market go to KTR +1 to +3, then there is a chance for the market to sell when the market creates CCYR on the chart. Okay, now do note, right, there's something interesting that I must inform you. Okay, now the Hang Seng, this is the cash SL level, right? This is the Hang Seng cash support level. So what you are seeing is that the day before the market closes below the SL. Then yesterday the Hang Seng moved higher. So logically, this low hasn't been tested yet. This low itself hasn't been tested yet. So this low, the number is 28,830. So basically what I'm trying to say is, if the Hang Seng do come down, there is a possibility for the Hang Seng to drop all the way back to 28,830. All right, because that is what we always see when the market closes below the SL level for the first time. Usually the market, if coming down, will test back the low of the one that first time closed below the SL level. So of course now it's very far away. It was 700 points away. So probably not today, but again, why not, right? Just traders, just be careful. If Hang Seng pull back, there is a possibility to see this 28,830 level. But of course, if the Hang Seng is strong, as we saw last 2 days, buying from the bottom, then Hang Seng may be testing back again at higher level. So this is the Hang Seng right now. So traders, just make sure that you know what to do for today. All right, cool. Okay. All right, so let's go back to the Dow Jones. So what happened in the US market is that the US market saw the Dow Jones rocketing to a broad rally since for the start of March. Okay, it's a very good start for March. S&P 500 jumped 2%, all right, for the best day since June last year. Wow, okay. So the sector that you should pay a lot of attention is the information technology sector. tech sector, sorry, because it was a sector that up by 3.2%, and the financials also up by 3.1%. Energy 2.6. This is interesting. Yesterday, crude oil price went down, but energy shares went up. So it seemed to be they just don't care, don't bother, just anything and everything just buy. So even the raw commodity like the crude oil price was going down yesterday, they bought the energy stocks. So this tells you that the market is not following the economy. It's just randomly or anything, it just buy, just don't care, don't bother. So now they are saying that the economic reopening because of vaccine optimism and the tech shares recovery is a rational reason why the market is going up. You can see that all 11 sectors registered gain. So it seems to be suddenly everybody think that it's time to buy shares. So of course, people say that it's because of the stimulus package coming up result, people are going to receive the money, 1,004 check. So this money, once they come on hand, they'll be buying shares. So my question on us is this: 1,004 can buy how many shares? Unless you buy into options. I mean, I thought the money is supposed to be meant for livelihood. So I cannot understand why how much 1,004 can push the stock market. Of course, you will buy something, but I cannot justify 1,004 can buy what thing that can really change your life unless you buy options like on GME stock or the AMC stock, and then the share price up by 4, 5 times, 10 times, then maybe lah. But you know what, the chance of that happening again. So seriously, I do see that there's a lot of smoke screen right here as well, but I'm not going to go in detail. But I'm just going to tell you this because the yield came off, so that's why the market is coming off. So well, very simple. As long as the yield stays low, then there's no reason to be concerned. But if the yield goes up, right, then I will see what they want to say there next. So you can see on the news side itself, right, they are saying that the stock market is going to go higher. They register the best gain, and obviously they tell you that, right, this is a great time to buy into the stock market. So it seems to be like that right now, okay? So that's why traders stand by. So let's revisit what happened yesterday, all right? So very clearly yesterday, the opening price was just below pivot 1. And I say this for the longest of time, once the market cross above pivot 1 and OP, you can only do is buy. There's nothing else you can do. And apparently it happens, okay? But of course, the KSI was red in color. So what you can do is that when the market go to KTR +1 to +3, anytime when the Dow hit that point, you take some profit. That is the reason why I did mention when the Dow hit 31,200 plus series, I say, took some profit first and then let the rest run and do your SWL. And indeed, that was a very good advice that I mentioned to you guys. And apparently the market went all the way up. So let's take a look what happened yesterday, shall we? So once the market above the OP and above pivot 1, CCRY you buy. 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 If you look carefully, it's all right. If you put the stop loss at the right place, okay, not hindsight, but the right place. The first stop loss will be here. The second one is all right. If you put it here, it's too near. So usually we put it somewhere back here again. So this is a second stop loss. That's very far. The third one is all right. It's either you put it here or you put it back here again. So again, this is another stop loss that's pretty far, but at least it protects you. The third one, you put it here or you just put it here. So you put it there, you are safe because the market dropped, but the market never come down. The fourth one, if you enter right here, stop loss, put it this one or you put it over here. So basically, as long as your stop loss is placed at the right place, then you will be able to enjoy the ride. Okay. Of course, the thing is this: when you come to entry, the stop loss for Dow Jones is best to be about 30 or 50, 30 points to 50 point minimally. If not, itself is too near. Anything lower than 30 points to put a stop loss is going to be very, very dangerous. So of course, stop loss, you had to use the V shape for you to take your stop loss order. Okay, so that's why yesterday, if you actually follow the mantra strictly above OP, above pivot 1, just strictly buy, you will be very, very safe. All right, so how many of you have made money from Dow yesterday? If you have made money from Dow, please key the word made. All right, MADE. All right, you have made money from Dow yesterday, please key MADE right now. Okay, let me see how many of you have done that. Okay. All right, how many of you have done that? Please key your answer. Okay, thank you guys. Okay, let's continue. All right, so let's look at the market right now. Now, Hang Seng has came down a little bit, but now it's trying to recover and trying to go above the OP mark right now, okay? So this is what happened now on the market. So let's look at the Dow. Oh, by the way, gold price has went below 720. I repeat, gold prices have went below 720 mark. Just to let you know, I already say, guys, gold will likely be trading lower. Not too sure if you got my little hint over there in the market. Okay, so let's look at the Dow Jones today. Okay, all right, take a look. Okay, so the Dow Jones is the opening price for Dow Jones today. Basically seem to be still on the uptrend because you realize that, right? It's above the MA. So let me just bring the MA up for you. So this is the MA. The MA for Dow today is approximately about there. It's about 31,334 around there. 31,334. Okay, that is the MA 30. And I need to put in also the BMB level, the SL, which is somewhere around here. And then I also need to put the MLP of yesterday around here. Wow, you can see that. Seems like today the MLP, all right, and the BMB SL level is around there. It's about the same level, all right. By the way, gold is still plunging down. Gold is at 1715 right now, okay? 1715 right now. So for people who are shorting gold, it's all right. Congratulations. I've been saying that to you. Hopefully you have done that. Okay. So today's Dow Jones, as long as stay above 31,334, the Dow Jones should be still going upwards, okay, based on the conventional. So you see yesterday it was on the downside, right? Today it just flipped. That's the reason why, that's why conventional chart itself has this problem. You can flip in, flip out based on where the price is at, okay? So that's one reason why I'm always concerned using conventional chart, okay? Now, the longer time chart is still the same. Nothing have changed. It was an expected pullback from the market, so it really happened. So now it's only whether the continuation will move on or will the market now go to new high again. So we're watching this pretty closely, right, traders? Okay, so for the longitude chart itself, still the same. The divergence is still there. The movement is still up. But as long as the Federal Reserve or the financial institutions are still buying, there's really no reason for you to be worried about. All right, of course, I need to change the all the 5% rule. I'll do it later on live again during our Super Tuesday. Okay. All right, so weekly chart wise itself, right? Well, interesting. The weekly chart last week has a very black engulfing movement, but now the white candle comes in, you seem to replace it. So we will watch out throughout the whole week to see whether or not this movement continue. All right, at this moment now, it's still very positive for the Dow Jones at this very moment. Okay. All right, so look at the market right now. Hang Seng has recovers. It has recovered. It has so-called closed the gap a little bit and trying to move above it itself. All right, the only thing that today for Hang Seng is a flat top at the moment, meaning the high and the opening is the same level. So not too sure does it have any indication of further downside. We'll see how it goes later. All right, but at the moment now, the Hang Seng seemingly trying to go above the opening price. Okay, it's trying to find strength doing that. All right. So that's Hang Seng. Let's look at the Dow Jones right now for today. Here we go. Now, Dow Jones today, the opening price is between the two pivots. Now, you realize that not every day the market will be above OP. I mean, sorry, not every day the market will be above pivot 1. Most of the time, the market is between pivot 1 and pivot 2. So what does it tell you? So whenever, anytime the market opens and trades above the pivot 1 or trade below pivot 2, it's a good day for you to make a lot of money. Later on during the Super Tuesday, I will show you what happened yesterday for most of the market. I can tell you this, if you have followed through, you have made a lot of money on your own, okay? This is something very important. All right, so this is the opening right now for the Dow Jones. So as long as the Dow Jones stays above OP, the Dow Jones should be going up again. So the upside today is about 31,824. But the KSI stays red. The KSI stays red. Now, this is where the leap of faith come in. If you believe that the KSI is warning you that the upside is limited, then watch out. If the market goes below OP, right, then there will be some selling. So I say the selling should come down the most about MLP level. I don't think they'll come down any more. If I'm wrong, then I apologize. Now, the KSI is red in color. Traders, if you want to short, right, you wait for the market to go to KTR +1 to +3. Then you will see a CCYR, then you'll go for short. That is a very important thing that you must follow. If you want to short the market, let the price go higher first. Then you short from the top, then it'll be safer. If you short from the bottom, sometimes it's going to kick you in and market may rebound from there itself. So this is something that you need to really take notice of that. Okay, very, very important. So that is the Dow Jones for today. NASDAQ wise itself, right? NASDAQ has went back into my trend line. So 2 days ago, NASDAQ was below my trend line. So that's why I told you guys, be very careful. But I did also say that the MLP is very critical. If the market trades above the MLP, it will go higher. And indeed, it really happened. Now today, the market has forcefully went back into my trend line. So at this moment, right now, it's pretty positive, right? But that is if it stays above the trend line. If the market bridges the trend line again, then there might be some selling again on the NASDAQ. All right, now this is going to be interesting. The NASDAQ MLP, that is about 13,150 level, not drawn to scale, so draw your own, right? 13,150. If the NASDAQ can hold there, that is fine. Okay, if the NASDAQ can hold there, that is fine. Yeah, sorry, yeah, message just came in. Okay, 13,150, right? That's if NASDAQ holds the fort there itself. So this is going to be very important. The NASDAQ has to hold above 13,150. Okay, cool. All right, that is the NASDAQ. This is the NASDAQ with the MA. So basically, it's all right. The NASDAQ is still actually trading below the MA30. The NASDAQ is still trading below the MA30. So actually, traders, you just have to pay attention to details. If the market failed to stay above the MA30, usually there's still going to be some bearishness in the market. So Gracie, MLP, all right, I think I did this several times already. Can you check back on the revision group? All right, there is this particular segment on MLP. If you cannot remember, you cannot find it, later on during Super Tuesday, I will do that again. But I think I did a very good job last Super Tuesday to talk to you about what's MLP. So why don't you just spend some time, go through the revision, search under MLP, you should be able to find that, okay? All right, no problem, can take a look over there. Okay, Hang Seng now is still coming off. Hang Seng is still coming off. So traders, be very careful. The opening price today and the high is the same level, flat top. Normally when it's a flat top, traders, there should be some profit taking in the market, usually. Okay, all right. Okay, so that is the, let's talk about the gold market today. Okay, thank you, Richard, for doing that. All right, that is a formula for the MLP, but more important thing is that you have to know how to apply on it. That's more important. Okay, all right, thanks. So yesterday and the day before, the gold, I mean yesterday and Friday, we saw the gold prices. Now, this is what happened. I'm telling a real story yesterday, okay? Now, yesterday, where the day before, sorry, some of the student was shorting gold, and then gold price come down all the way to this point here, okay? Then that was whereby when it go to 1720 level, we did mention that if gold is to go up above OP and above pivot 1, right, gold is a buy. Remember that? When the gold was above OP and pivot 1, we mentioned that gold we buy. So of course, gold really recovers and go higher. Then I was sharing a friend, that was a friend, basically tells me, Cal, can we buy gold right here? I say, why you want to buy there? He said that because gold seemingly is on the uptrend. I say that how you view this uptrend? He said that because from here. So this person viewed the chart this way, viewing only at this particular area here. And so far, in his opinion, or sorry, in her opinion, sorry, my bad, it's her, because it's actually both, actually both couple, right? Tell me that the gold will go higher. I say that if you look at the chart from this opinion, then it's a downtrend. So of course, there was a little bit of debate between us. And the day I said, look, okay, I just tell them this, look, I've said that gold 1755 will be a very important level to watch, right? Because when the gold was trading around here, I did mention that gold will likely be going to 1755. And it really happened. So the thing is this, I say, if gold can stay above 1755, it's okay. So gold went up to 1759. So obviously at that moment itself, traders were like, say, yes, Cal is going up already, right? I say, okay, at the moment now it is. But I did reply them, but if the market goes below 1755, then gold will come down. So what happened is that when the price went 1750, I checked with them. I said that, do you cut your position on the long side? They say no. I say, why? They say that because they think that the gold will go up again. I say that I told you that 1755 is a very critical level to watch out. They say yes, but they say that fundamentally it's time to buy. So, okay. So now this is what happened. All right. So gold price now is trading lower, and it's something that is not unexpected. We were expecting that. So global news white belts are saying that, right? They're asking each other now, is it time to buy gold? Is it safe right now? They are saying that the London gold vol at the record level, okay, in January, because people are buying gold to keep, apparently, as I told you before. And they say that because now the dollar is sturdy and share price is they have a dent because of the yields though gold is not going to be good. I say, huh? Okay, so when I read this thing, I just want to laugh. CNBC is always a great place to actually read articles. They simplify for you. But when you read it, you always have this sort of thingy itself. This is very normal when I actually read CNBC article. It's good to read, just that you just need to be very careful in the way they structure this. It will actually confuse you along the way. But that is the job, right, of them, isn't it? Okay, anyway, that's my personal opinion. So yesterday, gold was doing this. Now, gold was opening price was at pivot, near to pivot 1, right? So when the market crossed above pivot 1, it was a buy on gold. There was no stopping there. But the only problem is that the KSI was red. So when the market got KTR plus 1 to KTR plus 3 for gold, and if it hit CCYR, this is time for you to sell gold, not to buy gold. I know that it's above OP. I know it's above pivot 1. It's a buy. Yes, you buy it on the way up. But once it hit the top or it hit the KTR plus 1 to plus 3, it's your job to turn short when you see a CCYR in the market. This is a very important thing you must understand. So you look at it, my friends, you look carefully, you look at it. Okay, you look at it. When the market hit the KTR plus 3, incredibly by itself, okay, incredibly, look at it, incredibly, the color change came in on its own. And then it happened again. The color change happened again on its own, CCYR. Now, of course, at that moment, you may do a CCRY to buy, but of course, instantly, the market turned back to red, right? And if you remember the KSI rule, you should cut away your long and turn short. That is what you should be doing. And of course, when the market goes below the pivot 1, that means it lost its appeal, its upside for going higher, then naturally, the chance of it coming down is there. So that's why a friend of mine had been shorting gold yesterday. When the gold came off from the top side, a friend of mine kept on shorting gold all the way, kept shorting gold until it closes near the end of the day. I tried to get my friend to send up this his trading. Of course, he didn't follow exactly by all the rules, but he was just following the colors on the minute chart, 1 minute, 5 minute, and been shorting all the way down. So that's why traders, you really need to follow rules to basically win in the market. Fred, thank you so much. I will not speak on recording, but I know what you mean. Yes, indeed. Must be very careful. Okay, so before we go to the Bitcoin, let's look at the market once again. Now we can see that the NASDAQ is coming off a little bit. NASDAQ has came off a little bit at this moment right now as I'm speaking to you. The Dow Jones also come off a little bit at this moment right now. Okay, let me just reply a few more messages. You know, the thing is this, every morning I have to read a lot, or I don't, reply a lot of messages because it's flooding in a lot. But end of the day, I know as long as they're making money, I'm happy for them. So sorry about gold, right? Sorry to deviate. Okay, this is gold price now. Look at gold, 1717 level. Now 1717, right? I remember tell you guys, gold 1722 will be a level to watch. It's a technical level. 1722, right? It's also a KCB level. So now gold is trading below 1722, right? It's pretty clear. So the question is this, where will gold go now, right? I think it's pretty clear that gold will be going lower. All right, you don't need to be an expert to tell yourself that, all right, gold will go lower. So how much lower will gold go? Well, let's look at the conventional chart first. Conventional, huh? Okay, conventional, right? Looking at that now, you can see this is the reason why gold was there's a support at 1722. That was where it is. That was a there's a bit of consolidation back then, right? Okay. Then now the next level that gold might be going for will be somewhere around here. So that level result, what would that be then? Let me just get the chart right in, change the color a little bit. Okay, the next level that gold might be going down, it could be as low as 1697. I repeat, 1697. All right. So the next number that gold could be going down is 1697. Now, of course, you may say, Cal, that will be below the 1700 level. Yes, indeed. And I've been saying that it is possible for gold to go down below 1700 level. So traders, this is something that you must understand this. All right, it can be possible. Of course, it can go even lower. The next level that gold could be going down, the next fresh level, next chocolate bar is 1682. 1682. The next number the market can go is 1682. So traders who are actually looking at gold right now, you can consider these two positions, 1697 or 1682, to basically do a bit of buyback on the gold market if you're short, or you can just aim it there if you're looking to, maximize your short, things like that. Okay, but if you're going to short right now to aim for those levels, then you need to follow the TWB chart so that you can get it correct. Okay, so this is going to be very important. Let me reiterate this once again. Now, likely gold might be going down lower. I think that gold will break the 1700 level. So once it goes below that itself, the first level gold could be going down will be 1697, and then the next level could be 1682. All right, pretty bearish on this. And of course, if that say the yields have to move higher and the equity markets come down on profit taking on yesterday's upside, then I can tell you this, the gold will come down even faster. Gold will come down even faster. So traders, please be careful. Gold may trade lower. And of course, you can maximize this. It'll be very good as well. All right, traders? Cool, huh? If you like what I just shared, give me all the thumbs up, all right? I would love to hear from you, and you know what to do with gold. And we've been very clear that we've been very accurate, in fact, when we talk about gold trading, and I tell you how to use the MA properly, and of course, how to watch out for technical point to watch out for that. So guys, if you like what I share on gold, please give me all the thumbs up, and appreciate that. I also want you guys to make a hell of a lot of money today from trading gold. Well, am I short in the gold? Of course we are. Okay, cool guys. Congratulations for those who follow on and is making money from the market. Congratulations. All right, thank you guys. Thank you so much for your vote of confidence with all your emoticons. Okay, cool. All right, thank you. All right, so that is the gold on the conventional. Let's look at the weekly chart on gold. Look at it, terrible, right? The high of this week, which is just yesterday, was 1759. So it missed the 1762 by a fraction, a few dollars. And then after that, it started to trade below and it's seemingly going down further. So 1689 is the 61.8. And that is the same number that I just tell you guys that potential the market could be going down lower. So traders, you had to be very interesting, right? The 1689, it was on the daily chart from the KCB or the chocolate bar. Now the 1689 is also happen to be the 61.8 level. So that's why traders, when the gold price come down to that particular level along the range, be careful. There might be some intermittent recovery there. Okay, 1689. All right, so something watch out for there. Traders, stand by for that. Okay, stand by for that. 1689 range. Okay, so this is going to be I write down for you 1689 level. This happened to be the 61.8%. All right, from what I see lah, from where I took my lowest and where I took my highest, and then I do my directional, right? But I say that the selling will only come stronger when equity market fall later on profit taking, if it ever happens. All right, so traders, just watch out for that. Okay. Okay. Oh, and okay, clear on my screen. Okay, so guys, the thing is this: I am my SNG group is doing quite okay, and we are going to be buying gold from the bottom soon. All right, so if you guys want to convert and join the SNG group, right, contact Susan. All right, of course the fee is not cheap; it's $988. But if you actually think about this, if you find my gold trading have been pretty accurate, you can consider to join. But this will be talking about S&P and gold at the same time, but all the short-term trading on the both of them. Short-term and mid-term trading, right? SNG group. If you don't know what is it all about, again, later on, I will share with you guys later on through the TWB announcements, okay? So think about this, all right? Gold, if it comes down, it'll be a very good time to buy some gold from the bottom, right? And when that happens, it's all right. If you're in the SNG group, you will be able to get my messages right to you on how to trade gold, okay? All right, cool, huh? Okay, that is the weekly chart. Silver, as I told you guys, silver, avoid and avoid and avoid. And you can see it's really, really manifesting. See, silver is coming down. Now, 2-3 days ago, again, I have students come and debate with me and ask, how come silver isn't going up? I say, why must it go up? They say that because they hear from some guru saying that silver ratio is higher than gold, hence silver must go up. I say that by theory, this ratio is not wrong because you put it in mathematically, you can see that silver overall goes up the last few months and gold come down the last few months. So the ratio definitely favors the silver side. But I did say that, right? The gold price now, if it comes down and if silver falling through, you just have to look at the gold. As long as gold comes down, silver will follow first. So it's just like go down by 3 steps, gold may go down by 3 steps, silver may drop by 1 step. When gold rebound 2 steps, silver may go up by 1.5 steps. So it's a bit more, right? So that's my point here itself for silver. But at the moment now, silver will likely trade downwards, okay? I repeat, silver most likely will trade downwards. It should be able to test the trend line here. So that is about $25.80 level. So we are now $26.24. So silver still got some downside to go. Silver still got some downside to go. So traders, I don't think it's still the time to buy silver yet. Okay, all right. So hold on your horses. Don't grapple into silver right now if you are looking to buy. Okay. Crude oil, I told you, crude oil is very interesting. Yesterday, crude oil prices should be going up, right? Because you saw the energy counter going up. But if it's not happening in that manner, that means there's some manipulation ongoing right now. Because if the raw commodity is not going up, how come the all the tech shares are going? I mean, so-called the energy shares is going up. So my personal take is this for oil. Look out for this. All right, unless this is a manipulation by the Federal Reserve to bring down inflation. If not, it's all right. Watch out for this. If crude oil comes down to $59.32, there should be some artificial support for crude oil at $59.32. Okay, if you can hold up, the crude oil will go back up again to 60 to 61 level. But if the market fail, then coming down to the next technical level, that will be approximately about 58. Okay, these are all my conventional chart drawing. So these are 2 levels to watch out for. Okay, this is the view of that I'm seeing now for the crude oil. All right, so let's look at gold right now for today to wrap it up. Oh dear, Crude oil is still coming off. Sorry, gold is still coming off. Okay, this is bad news. All right, guys. Look at gold right now. Gold today opening price is actually between the two pivots. Okay, the opening price is between two pivot. Above OP is a buy towards 1737. Okay, but because the KSI is red in color, and you can see that the blue bars are there, even though it's KCX, but the blue bar is extended downwards and the current trend is down. So that's why the KCX, the green kite, doesn't really function as well right now. So you focus on the sell if you can. So below OP is a sell. So likely based on the rule, likely gold will be trading down to 1700 very soon. I repeat, gold likely should be trading down to the 1700 level pretty soon. Okay, so this is why I keep on telling you this, gold could be trading lower, and this is why. If gold hit 1700, there should be some intermittent rebound first because it's pivot 2. But if the gold smash below 1700, then that's it. 1689 could be the next level. The gold could be going down towards that level. And of course, you can see that there are many KCBs over here as well, all waiting for gold to pull back to those range. Okay, cool, guys. Okay. All right, so that is the gold market. So I hope you guys are going to make some good money from gold today. All right, so yesterday for our Bitcoin, very good. We have another good run, 4 wins out of 6 trades. 1 good win from the bottom, another one in the middle. Then there was a loss, consecutive 2 losses. Then after that, 2 wins again. So overall, 4 wins out of 6 trades is pretty good, right? So we are still waiting for the better spread to come in from AIMS. Once it's there itself, right, we're going to have a great time doing this. Okay, so continue to do well with Bitcoin. Look and studied it. I'm pretty sure you guys are going to benefit of this sooner or later. Okay. Now, Bitcoin, the day chart itself today has got a bit of resistance. The resistance is that the Bitcoin now has a bit of resistance at 49,571. So you have triggered it, and now it's coming off a little bit. But don't worry, the KSI is green in color. So anytime the Bitcoin comes down to KTR -1 to -3, it will be a good time to buy into Bitcoin if you really want to do that. But of course, I told you guys the 44,600 level is the level that I prefer to buy. And yesterday, the market missed my level by a bit and recovered all the way up. So that tells you how powerful the system is. So for traders, stick with the rule. As long as market stays above OP and above pivot 1, there is a chance that the Bitcoin will retest the 50,000 mark again. Okay, there's a good chance you test again because today high is 50,075. So now it's really a bit lower, right? But once it crosses 49,571, it will test again the 50,000 mark. Okay, so traders, watch out for that on Bitcoin. All right, that will be all for today's MAO for this part, okay, of this segment, the technical. All right, I'll be going to the special charts. If you are not interested to listen to, you can just log off right now. I give you 5-10 seconds to log off right now. Okay, still around? Okay, continue then. All right, now the M1 money supply, don't know why, but I realized that it's no longer available. Wow, is it because too much money, too open, transparent, secret now, it become not possible? There's a lot of problem. That's why they are cutting it away. So it's no longer available. So, all right, discontinue. So why is that so? I think the guess is pretty simple. Right, now this is the bonds ETF, and you can see the reason why recently the bonds price came off so much, right? That's why the ETF also came off, and now we're at technically a very important technical point at 140 to 138, and of course the drawdown in movement, the volume has surges up. So of course at this moment now, two sides of the coin. Some say that from one view, they say that a lot of selling, some say a lot of buying. But regardless itself, right, if the market loses a 138 level, that means the next level is 120, and that means the bond prices coming out 120 will, this is the ETF, the 120 on the ETF, then yield will likely be putting 1.7. And if yield hit 1.7, I'm very, very sure there will be alarm bell panic pattern running around. Okay, so traders, be very careful on that. Now the SPAC Mania continue. Look at it. These are the public listing of the zero revenue companies valued at $1 billion or more. Look at it. The IPOs are really not really there in the market this year, but look at the SPAC mergers and the pending SPAC mergers. Oh my goodness. Look at the amount of pending SPAC mergers. There's so many of them. And the market is going crazy. It's just like telling you now, you don't care now, close two eyes. As long as you have money, you can justify your earnings in a way in the future. Let's do the IPOs, and this do the listing, sorry. And this is really nuts. You don't see it happening previously, right? It's only now because there's no way. They just want company to come in, they just want money. And this is why, things is going crazy. So of course, people say that there's no bubble because everything is going fine. The bond movement, the money coming in is still at a high level. That's why the stock market goes up. But the thing is this, you can see that the ICI equity fund managers and ETF accumulative, you can see the other side is actually very interesting. The equity is actually coming off. So it's trying to tell you that, right, the market, the traders are now really looking at the longer term. But my question mark is, if that is the case itself, right, why is the equity accumulative flow going away? So to me is that when I see something like this, I get my question, is that because they're all buying bonds? Cannot be, right? So the point is that someone is definitely unloading as and when the market is rising. So this is my personal take. Of course, there's two different views from here, this picture here. And of course, finally, Deutsche Bank says that central bank can't afford to have higher rates because the global debt is so high. If they increase the rates, what will naturally happen? The cost will increase. If the cost increases, then the problem will accelerate, and of course, the whole market will just go into a spiral. So that's the reason why all the world now central bank is trying to pull down the yield. They'd rather do other things to pull it down. So that's the reason why probably crude oil price is coming down right now, to make sure that the inflation doesn't come up. But the problem is this: if they keep on putting money in the market and the market buys into that and start to do more stuff, it's just a matter of time. Once it basically ran wrong, it can be a very big killer, right? So traders, you just need to understand this. It can go very, very wrong. So at the end of the day, you make your call on this. All right, thank you guys for today's MAO. I hope you enjoyed this session. Today is Super Tuesday, so see you at 2 p.m. We will do a good revision, and then I'll show you some special chart that I promised you guys since last Saturday during the preview. All right, have a great day. Bye-bye.